Well, hello everybody, clients of Empire Financial Group, those in our professional network, and those of you watching who are learning a bit more about Empire and considering becoming clients of ours. This afternoon, it is my distinct pleasure to welcome James Hawkins along. He's a partner at L1 Capital and head of the L1 Catalyst Fund that features in two of the Empire managed account portfolios. Now, the scale of funds that we manage here at Empire means that we often have investment opportunities available to our clients that might not be available to others, or that we have them available at preferential rates. Or it also means that we have the relationships with those who are at the very top of the fund managers, who are the ones who are making the decisions and pulling the levers inside those funds. So it is our great privilege to have you with us this afternoon, James, and welcome along to what's episode 9 of Conversations on the Couch.
Thanks for having me, Raymond, and thanks to Empire for hosting today. Really thrilled to be here.
Yeah, wonderful. Now, I don't want to go into too much detail. I'll let you explain what this particular fund is all about. But it is a little bit different. It sits in our portfolios as, I guess, colloquially say, a little bit more of an exotic option within our managed accounts. But some would describe the L1 Catalyst Fund as an activist fund. Can you explain to our audience what that means and what the L1 approach is to active management with the companies that you invest in?
Sure, very happy to. So, just at an overview level, the L1 Capital Catalyst Fund is a 10-stock portfolio, long only, no shorting, no leverage, with an ASX 200 focus. It's very much a best ideas fund with an activist overlay. And answering your question as to what does an active fund do, active fund management is really the opposite to passive, where you don't have any engagement with the company, where you just invest in a company and let that company's share price ride up or down as the market may move. Active fund management is where you really get involved, and I talk about it across a cross spectrum of what from lowercase a activism, which is done in private, all the way to uppercase a activism, which is done in public, right? 9 times out of 10, the engagement that we have with companies is done in private, and you'll never hear about it. It's done with boards, it's done with management teams, it's done in private, and it's able to be done in private because we are an investor of scale with a track record and credentials to mean that, we have the ability to have a voice. Sometimes, but it will be the exception, not the rule, we do our activism in public. But that'll be a special set of circumstances, because more often than not, we can achieve our objectives and get the outcome we're seeking to achieve in private.
So just to recap on that, so it's 10 companies, and given that it's 10 companies, you're super committed. You go in deep enough with enough scale that it means that you have some influence, as opposed to being a small shareholder across many companies, a very deep and significant shareholder in a small amount of companies. So I guess the idea is that influence means that you can assist in certain outcomes occurring within the company that support where you think that company should be.
Correct. I mean, that's a good description. The Catalyst Fund is a $1.8 billion fund, 10 stocks, that's a hard cap. Typically, we have a 10% portfolio weighting in each company that we invest in. That means on average, we'll have 180 million in each company we invest. Now, critically, and a real point of difference to many funds in the market, we invest alongside the long short fund. So they might have a similar amount of capital that the Catalyst Fund has invested in that same stock. So in combination, we might have 360 million of capital. And in the stocks that we're investing in, and they're very much typically outside the ASX top 20, what it then means is we've got a real voice, and we're typically the first, second, or third largest shareholder on the register.
Yeah, and I guess that ties in nicely with the next question that I was going to ask you. Is that for that reason, because you're not just tracking normal market trends? You mentioned it's a good ideas fund. We do have exposure in our portfolios to the general market trends, and then we choose options like this for the good ideas and for that performance that we hope over time is going to be an outperformance, but over the short term can make that performance look very different to the general market trends. So, how does the Catalyst Fund generates its returns, and how does it differ from a typical long equity fund?
Sure. Having 10 stocks versus a typical, ASX listed long, equities fund that might have 30 or 40 stocks is a significant point of difference to start with. The stocks in which we invest in are outside the ASX top 20. You're not going to be getting the big four banks, BHP, Rio, Fortescue, you can invest in our fund. If you want to invest in those stocks, you invest in, cheap ETFs if you want exposure to them. But our fund is, we have a high tracking error by design, and that means we are actually, picking stocks to deliver alpha based upon, our views on their intrinsic value versus the current share price with no regard to the index. We are index agnostic. We are trying to make returns for our investors based on our stock picking. And for any stock to get into the Catalyst Fund, they need to get through 3 gates: a value gate, a quality gate, and then a catalyst gate. And the catalyst is where the activism comes into play, and it can be of a strategic, financial, operational, or governance type, type catalyst. So, we are very much bottom up stock pickers. We get our hands dirty. We've got a voice, and we try and enact and accelerate catalysts, which will really generate alpha, which is, very separate and distinct from the market at large, because 2/3 of the index is in the top 20 stocks, which we're not going to own.
Yeah.
So by virtue of that definition, we're going to move in a very different fashion to the market as a whole.
To those who are watching, can we just expand on what that term catalyst means? You talked about some broad types of catalysts, but just very briefly, what would be examples, 1 or 2 examples of a catalyst?
Sure.
What you're looking for in a fund that might drive that catalytic event.
Sure. A catalytic event, it can range from being initiation of a buyback, increasing a dividend that a company might actually typically pay. It might be improving the governance through appointment of a new chair and new non-executive directors. It could be costs out. It could be selling non-core assets. It could be saying no to doing value destructive M&A. It might be, saying yes to value accretive M&A. So what's interesting about our fund is the fact that every situation is different, and the catalyst in every stock that we select will be different from the next, because they're operating in different industries and they've got a different set of circumstances.
And I guess one example of that's present in the fund that a lot of our viewers will be familiar with, and it's actually the timing of us speaking today is quite fortuitous, because it really does, I think, tell the story from not necessarily from beginning to end, but in that wider and longer term cycle. We've been wanting to have this conversation for a while. Calendars didn't align, but if I think about it, the timing now, if I think about a catalyst and a company that we're all very familiar with, primarily here in Western Australia, being Mineral Resources. And it's been all through the press, and our clients are aware that L1, after Chris Ellison, is the second largest shareholder in Mineral Resources. That performance of Mineral Resources over the last couple of years meant that this particular fund was tracking completely differently to all of our other equities funds. But then over the last, let's call it 7-8 months, we've had a tremendous turnaround as a result of a turnaround in the MinRes share price, and a decision after some of our discussions from the Empire investment committee to double down on our investment in 12.1 on the basis of some of these discussions. So market was very bearish on MinRes. Since we made that decision to increase our exposure, the share price in MinRes has doubled, which has meant we've had a remarkable outcome in our portfolios as a result. Can you walk us through your approach to investing in MinRes during that period when everyone else was very bearish? So your decision to continue to invest, and what you saw in Mineral Resources that the rest of the market didn't.
Sure. So if we go back, 12 months ago when, MinRes, first hit the front page of the AFR, We were, as you said, the second largest shareholder to Chris Ellison, and when we looked at the company, we made an assessment as to what we deemed to be the true intrinsic value of that stock relative to the share price at that time. And we looked at it as a company that first and foremost was a mining services company that had annuity style, income stream from those long life contracts. Second of all, it was an iron ore company through the Onslow Iron Ore project primarily, and it was converting from being a high cost, low volume to high volume, low cost operation as the Onslow project ramped up. And then finally, it had its lithium division, with Mount Marion and Wodgina being the key assets within it. When we looked at it, we in the situation that unfolded, there were, in our mind, three key things that needed to be addressed. One was the corporate governance, clearly. Secondly was the ramp up of the Onslow iron ore operation, and thirdly, it was the balance sheet. And when we looked at each of those three things, we had a view that over time, each of them could be addressed. So Mal Bundy's been appointed the new chair of Mineral Resources as at the 1st of July, and he's brought a bunch of new directors on board, some of whom are known to us and we respect really highly, like Ross Carroll and Laurie Tremaine, to name but two. So now the board has 5 of 8 new directors. The Onslow iron ore operation, Rafi and I visited in May with a number of other investors for the site visit, and what they've done there in a short time frame to bring that online is really impressive. They're already above nameplate capacity of 35 million tonnes per annum. They've been running at that run rate for more than 3 months, which means that they received a $200 million contingent payment from Morgan Stanley Infrastructure Partners recently. And then, thirdly, you have the balance sheet, and they had $5.3 billion of net debt. Now, only last week they announced a sell down of 30% of Mount Marion and Wodgina to POSCO for a 100% all-in look-through valuation of $3.9 billion. Now, the market had valued those assets at $2.6 billion. So it was a 50% uplift, for the look-through business that the 70% they did not sell, and then even for the 30% that they did sell. Once they, receive the proceeds from that, in conjunction with the $200 million from Morgan Stanley Infrastructure Partners, net debt will be 2 times net debt to EBITDA. To us, that's a much more manageable, sensible, level of debt for a company. So, we were very active in our engagement with the company, both, privately as well as publicly. We put out statements as to what we wanted to see, going forward, and we had a voice. We wrote to the board and articulated our views and put it on letterhead and explained our holding, explained our views and why we had the views that we had. So, we've been pleased with the operational performance of Onslow, the fact that they are running above nameplate capacity. We've been pleased with the fact that the lithium market has rebounded the last, 4 months. The lithium price is basically double what it was in June. We thought that were, at levels that were not sustainable, however. But, we've got in, we bought stock, once, it was really much closer to its lows, and it's rebounded. So we take a longer term view in stocks, and we try and own a stock for, often a transformational period. And we thought that MinRes was a company that had those 3 segments that, in combination were worth a lot more than the market was prepared to pay for it when it was on the front pages of the AFR.
And by taking such a strong position, that deep position, 1 of 10 stocks, when those opportunities come good, it's reflected very, very strongly then within the fund itself. So what a wonderful story. James, thank you very much for coming along and joining us here at Empire Financial Group and sharing this knowledge with our clients and with our wider network. I hope this discussion's given all of you watching an understanding of the analysis that we do here at Empire with the choice of funds within our portfolios. And if you'd like to learn more about what we do here at Empire, please get in touch. Thank you.